Hello and welcome, everybody, to our Friday edition of the Hot Corner Insider Live Strategy Session. I am your host, as always. I'm Steve Straza, the Director of Research at All Star Charts. Today is February 9th, 2024. We will be back to our normal programming next week, where the strategy session will be held, as usual, on Wednesday at 1 o'clock Eastern time. But I'm kind of happy that we're doing this at the end of the week this week, because it was a big week. A lot of stuff is moving. You know, we're having a blast out here with the bull bear debates on the morning show. We're going to touch on some stuff quickly. Hopefully I'm high energy enough for this video. I feel like I'm losing energy today. It's the end of the week, Friday afternoon. It's been a long one. I almost didn't bring any intro slides today, but we're going to do a little bit, have a little conversation about some things that are moving, and then we're going to jump into some theme-based setups. A lot of them, you'll notice, are not actionable, and I think that's okay. We're more illustrating a point about market strength, and there are a couple that are actionable. I think we want to pick our spots selectively right now. We don't want to stay away from longs, but we want to be a little bit selective about them, particularly in the large and mega cap growth space. Things are getting kind of frothy. A lot of vertical, uptrends that have carried off of the, October lows just keep dripping higher. Eventually, these stocks are going to need to correct. But let's get through the disclaimer before we get to all that. Nothing we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes, not to be construed as investment advice. For more on our disclaimer, stockmarkettv.com/terms. We're going to talk about breadth. I think this chart of the equal weight S&P 500 is a good primer for that breadth conversation. Just kind of set the stage here, give us a little bit of context. The equal weight NASDAQ 100, if you guys remember, I think is the chart that we kind of used as our primer last week. I said it'd be really nice to see that one break out. That's the QQEW. We have new all-time highs in the QQEW, right? The equal weighted NASDAQ 100. Now we're getting new 52-week highs in the equal weight S&P 500. I think this one, runs back to its prior cycle highs, just like the other large cap indexes that we, continue to see, and then takes them out. But more importantly, the equal weight S&P 500 making new highs, resolving this base in what looks to be a rather decisive manner at this point, right? Because you have the base, right, the reversal pattern, and then you have a nice little continuation right at the upper bounds of the base. Great entry. Not that we want to trade this vehicle, but if we did, from a chart pattern perspective, love to see that, where the reversal's in, then you get a little bit of chop or digestion, right, of that automatic reaction leg that brought you out of the range, and then you digest, you chop, you consolidate a bit, and then you go. So love to see that. And what it tells us is that it's not just 7 stocks, right? It's not just the Mag 7 or the mega cap growth names. This is an equal weighted version of the 500 largest, most important stocks in the United States. For it to look this good, it can't just be 7 stocks, right? So that speaks to the participation beneath the surface, maybe not being great, right? Which we talk about. You'll hear all about it on Twitter, right? Maybe it's a little bit thin out there, but it's okay. More on breadth. I think this chart is so important. Just checking the chat here. Yeah. Say hi, guys. We'll definitely take questions. I know, Rachel, I'm the best at the disclaimer, aren't I? I have fun. I have fun doing it. I can do it with my eyes closed. I printed this chart out. It's downstairs right now. I'm literally going to frame it, and it's going to go on the wall right behind the camera that's pointed at me. Why? Understanding the breadth cycle, or the way that the market cycle plays out through internals, which is what we're looking at here, is so important. We talked on Twitter Spaces today. I thought it was an awesome conversation. Larry kind of kicked it off. And I was making the point that I'm so glad I have the body of knowledge I do in technical analysis and fundamental analysis for that matter, right? Because what that allows an analyst to do, right? Understanding all these indicators, understanding all these data points, being able to look back through history, running the back tests, reading the white papers on breadth. Shout out Mike Hurley. We stole this. He's a good friend of mine. I am a Mike Hurley disciple when it comes to breadth analysis. He won the Dow Award for his breadth work. He's an excellent CMT. He also won the Lipper Award in 2008, I believe it was, right during the financial crisis. Top hedge fund manager on the street. So Mike knows what's up. We totally stole this method of analysis from him, but he is, I guess, the authority on market breadth or market internals in the CMT community, right? And that's one of the strengths that we have as an organization is that we are friends with all these people. They're very much, within our network or our community. And we don't have to reinvent the wheel, right? We can look to, hey, who does this the best? Do it the same way. We all have the same data. What we're talking about here is the three events in every cycle that matter, right? Because I was talking to one of our clients earlier today, and I said to him, we stopped doing our weekly breadth column. We used to write about breadth every single week. And I shut that down. I said, we can't do that anymore. And the reason why was because 90% of the time, there's really not anything to say, right? At least not anything with substance, not anything that we should really pay attention to in terms of breadth. That other 10% of the time where there is something to say, in my opinion, it's maybe the most important data point of every bull market cycle, the breadth thrust. I've done presentations on this throughout the years. In my, earlier technician days, I'm only talking about 4 years ago, I was the breadth guy. I did presentations on breadth like a couple times a year, got to know it really well. So again, getting to know this stuff, getting to understand this stuff gives me the ability to know that I can ignore things, right? It gives me conviction in knowing not to think about something or not to weigh something into my weight of the evidence approach, right? A lot of times we have divergences in breadth that you don't want to overthink, right? But understanding breadth analysis kind of gives you that ability to say, oh, this doesn't matter right now, right? I'm not going to cloud, my view or my outlook with this data point because it's not the right time or it's not the right one or based on the cycle, right? And then it doesn't cloud your vision and you can stay the course, right? Throughout and see a bull cycle through. So what am I talking about? In the world of breadth, you have the breadth thrust. Very, very, very important. Like I said, the single most important data point in any bull market is the breadth thrust for me. It's typically preceded by an exhaustion reading, right? So a downside thrust or an extreme bearish reading, and then you get an extreme bullish reading. That's the initiation, right? The initial thrust. That is highlighted here in green. We get one every cycle. After the initial thrust, you tend to have huge divergences, right? You could see them here in the percentage of stocks making new 20-day highs. We get the thrust and we never get back there, right? You get the thrust and you never get back there. The thrust never get back to that high water mark. See it in every cycle. This is the net new highs, new lows, right? You could see them diverging as well in every cycle. After the thrust, what is the next important event? What is the next thing that we almost always have every breadth cycle? Divergences. And you're hearing a lot about these divergences today. They are so normal. In fact, if we didn't have breadth divergences like this, I would be very worried because that would be different than any other cycle throughout market history. So we have these breadth divergences. A lot of people are talking about them. I'm here to tell you, ignore them, throw it out, stop following those people. Okay. After the divergences, so you got the thrust, event one, you got the divergence, event two. Then typically you have what we call a fall day. Again, this is a Hurleyism. Shout out Mike Hurley. We love you. And that's marked here on this chart with the the vertical red lines. That's the fall day. The fall day is really the first shot across the bow by the bears. It's that first, initial warning sign, right? Or really a bearish thrust showing you that market internals have turned or rolled over. And then you want to really focus on the price chart and look for the price peak, right? The cycle peak, right? So let's just walk through a cycle. For example, we can use 2018, right? Coming out of this bear market low in 2018, we get the initial thrust. You have the divergence here, right? The net new high lows peak right here before COVID, and then the market peaks. So you actually, this was an abbreviated cycle. So right before the COVID sell-off, we actually had no fall day. See, no warning sign here. Typically, you get this warning sign. So after COVID, it happened, I don't know, a month before the market peak. You had that fall day, the divergence leading into it, and then new breath thrust telling us that the bottom was in and a new bull market was underway. I think this is such important context. So what are we seeing right now? Well, let's take it back to off the COVID lows. We had a short-term highs peak, November 9th, 2020. This is a percentage of 3-month highs, and then they diverge, right? The long-term highs, the new 52-week highs, peak in March of 2021, and then they diverge. The index doesn't peak until 3 full quarters later after the new 52-week highs peak, December 27th, 2021. Okay. Now, today, we have a breath thrust here in December on 12/14, right? Short-term new highs probably peaked for this cycle. I would think they definitely peaked. This was the highest reading we've seen in like 20 years. New 52-week highs, when will they peak? We'll see. But in the meantime, the short-term new highs will definitely diverge. We're seeing that, right? So you're hearing about these divergences. One of the more important things about this chart is breaking out to new all-time highs. So we got the thrust, we got the divergences. Do we have a fall day? That's when we need to start worrying. Here are the percentage of stocks making new lows. They are falling. We need them to be rising to get a fall day, that first warning sign. Nowhere's near there. There's no evidence that we're even close. In fact, we just had the initiation thrust in mid-December, or like a month and a half in, maybe almost 2 months in from the initiation thrust. I wouldn't expect a fall day to happen until maybe end of this year. Every cycle differs in terms of time frame, but I definitely wouldn't expect it now. That would be the earliest fall day we ever have, right? So I'm not even looking for that. What I am looking for is, new highs are diverging. Yeah, that makes sense. Okay. Well, before we get the fall day, new lows need to start increasing. They're falling, right? So from a breadth perspective, the important thing to know right now for your money is that we just had the initiation reading. We just had the breadth thrust less than 2 months ago. It's probably going to be some time until we get that warning sign. In the meantime, you will hear a lot about breadth divergences. Ignore it. Intermarket. The dollar has really helped keep us on the right side of things for years now, for the past 2 cycles, really. I mean, you go back to 2018. The dollar has been some of the best evidence that we have. Now, this year, you see this inverse relationship where, dollar peaks back in 22, rolls over, stocks bottom, start moving higher, right? And then we get this brief corrective wave. I guess it wasn't too brief, lasted a couple months, started in last summer, led into the lows of late last October. At the same time, we had dollar showing strength, a nice little up leg off of the lows here, right? So the dollar bottoms in the summer, starts moving higher, stocks peak in the summer, or short-term peak, at least start moving lower. Then what happened in late October? Dollar peaks and rolls over. Stocks enjoy this huge Q4 rally. We get a breath thrust on December 14th. Now we get to January. Stocks keep rising, but look at the dollar. Dollar's up like 3.5% from its lows late December. So the dollar's been moving higher so far in 2024, and stocks have been moving higher. Okay, so strange. Typically, they move in opposite directions. What happens, God forbid, if the dollar were to roll over and stop moving higher? Stocks are moving higher even with that present headwind of a rising dollar. What if that headwind goes away and the dollar starts falling? Stocks were able to rise through that. They're probably going to be doing really well if that headwind's removed. right? Let's talk about some stocks. Nvidia, listen, if you've been in it, you don't want to make the bet that this bull market rages on and Nvidia doesn't participate, right? Never want to make that bet. But are we likely to see continued freakish leadership from these AI names? I don't know. I'm not saying definitely not, but boy, has this market been rather bifurcated for over a year now, where these mega cap tech leaders or these, early AI beneficiaries are just absolutely, crushing it, moving higher at a pace or rate of change, so much faster than the rest of the market. I don't think that persists. Has the easier money been made in a name like Nvidia? Probably. Am I overwhelmingly bullish on the future prospects for a company like Nvidia? Yes. Is it wildly expensive from a valuation perspective? Yes. Is it near impossible to value a company that's growing this fast? Also, yes. It's not cheap, but how expensive is it really depends on the growth rate. When you're doubling your revenues every couple of quarters, it's really hard to kind of put your finger on, a valuation metric for a name like this. But I do think second target has been hit now since taking out the prior cycle highs in the second quarter of last year, around 336. Target 2 hit now. We've more than doubled since breaking out above the 21 highs, right? We've gone about 7x from the October 2022 lows. I think you feed the ducks here. I think you feed the ducks here in Nvidia. Pay yourself, great trade. Advanced Micro. So this looks like Nvidia back at 336, right? Taking out those prior cycle highs. 2 targets have been hit since. I'd rather be in a name like this. Also very expensive. Also an AI hype name. I don't like the word hype because I don't think it is hype. I think it's very real. There will continue to be big winners that are making money off of AI. Some of the valuations, at least in the names that now everyone knows about, definitely getting a little stretched here. They have shown outsized, outperformance for a while now, a lot of these names. So we do want to be a little bit careful. I would rather buy the fresh breakout stuff, something like AMD, 164. If we're above there, I think this one is perfectly actionable right now. You can't own it below 164. No way, right? That would be a failed breakout. Maybe you get a fast move to the downside. That would be a don't touch. If we're above 164, I like AMD a lot here. Maybe as much as any of the names that we're going to talk about today. Target of 233. Uber, you all know how I feel about Uber. Earnings out last week. This company is just printing money. I think they pay a dividend eventually. They have something like $5 billion in cash and cash equivalents. They grew their market share in the 10 biggest markets for ride hailing. So not only are they already dominating the space, but they're pretty much eradicating any competitors. Again, and I know you've heard me say this over and over and over again since last year, this is a winner takes all business. So you don't want to buy Lyft for a catch-up trade, I guess is the point I'm making there. You just want to own more Uber. Uber against 64. We're going to show a lot of charts that look like this, where we got the breakout above the prior cycle highs. At this point, if you're not already in, you want to be buying these names on weakness, right? You want a little throwback. Your risk could be really well defined at these prior cycle highs. You know exactly where you're out. Definitely going to see some demand show up if you do get a retest of this level. Are we definitely going to get some corrective action that brings us back to our perfect risk level? No, not in everything. In some things, probably, right? But that's how we want to play these. I don't think you want to buy Uber right here, in the middle of this range. Weakness back towards 64 all day. I think we continue to talk about this one for years and years to come. I think we're talking about this one in whatever the next version of the Magnificent Seven is. I think Uber will be in that world of mega cap growth companies that's just absolutely dominating. It's an ecosystem name, right? Which means they just kind of get you in their world and then they figure out how to monetize you. I love the model here. I love what Uber's doing. I think they have one of the best CEOs in corporate America, and they're just firing on all cylinders. Weakness towards 64, though. ServiceNow, same setup. I could say a lot of the same things. This is another AI winner. Go listen to an Nvidia earnings call. They talk about ServiceNow. This is a big one. 708. You want to know weakness back towards 708. Target 940. Mark McLaughlin, Form 4 filer. Not to be confused with Sean McLaughlin. NASDAQ Cybersecurity Index, new all-time highs. Look at this breakout, right? This is the fund or the index for cybersecurity. CIBR. Clean breakout. Really good looking chart. Looks like a lot of the individual stock charts that we're talking about here. What does this tell us? This is definitely a pond that we want to be fishing in. And we've been fishing in it. We want to keep fishing in it. CrowdStrike, probably the best one. Probably the best looking one. Short Palo Alto. Definitely in that conversation as well. This one a little bit more actionable here, a little bit cleaner. Any sort of weakness, excuse me, back towards 298, you want to gobble up. And a big purchase here. Big Form 4 filing, $6 million. And that happened back right around here at the lows, right? So that's why we pay attention to these things. She's already up 3x. Roxanne, Austin, Roxanne. Sometimes the names are backwards. I don't know. The point is, insiders were involved at the lows. Love to see it all the time. We put them on our list. We buy them when the trend reverses. We've been in CrowdStrike since the 170s. We've already hit 2 targets. I think we stay long this name. But again, just like the others that we just talked about, weakness back towards those prior cycle highs is the best way to enter. Palo Alto Networks. This one's kind of leaving the station again on us. Another name that we just keep talking about, going back to the well on 342. Really, you had a high and tight thing here. This one just has not given you much in terms of, getting into it, right? Or setting up. It consolidates, it goes, it consolidates, it goes. But 342 would be the current risk level for Palo Alto Network. That's your industry leader in the world of cybersecurity. UiPath. So this is one of those cloud computing names. It's really working today in sympathy to a monster beat from Cloudflare, which is ticker. So you're seeing a sympathy bid across the whole space. DataDog, MongoDB, I think Snowflake is a part of that. Fastly, right? Those kinds of names, the cloud computing, these data names. 2250 is the base breakout level. You want to redefine your risk right here at the pivot highs or the AVWAP right around 2550, 26. Great. Either one works for me. And your risk reward should be money here with a price target of 40. And that's really just the first stop. The way I'm playing names like this is a new bull market. I don't think we're in the late innings of the bull market like we talked about. We just had an initiation thrust, a breath thrust in middle of December. I like to invest for the entire cycle, so I would want to ride this name, keep riding it until momentum kind of falls off and the broader market is signaling to us that the bull is ending, right? And I think by that time, a lot of these completed trend reversals probably get back to those old highs. So I know that sounds crazy right now, talking about $90, we're in the 20s, but these stocks drew down 80, 90% during the bear market of 21, 22. Why can't they go 4 or 5x in the bull market that follows it? I think that's, at least the right question to ask. It doesn't mean don't take profits along the way or feed the ducks or reassess things at your risk levels. But to think that new all-time highs are out of the picture for any of these names, particularly the ones that are, really doing well on a fundamental basis, I think is crazy, right? I think we should be asking ourselves, can we get back to those old highs? Because I remember the narrative just a year or two ago was you'll never see these valuations again. And you hear that literally every cycle. Oh, you'll never see those valuations again. You'll never see that valuation again. We always see them again. We literally always see them again. DataDog, DDOG, the dog. 115 was really the level. I think at this point, let it dance. So strength above 147, the next fib, or weakness back towards 114. But again, this is one of those fresh reversals, right? So fresh, so clean. The path of least resistance is now higher. Early innings of a new uptrend, right? A fresh trend reversal. You know, you're not getting into the bottom. You don't want to get in at the bottom. When you get in at the bottom, everybody likes to brag about, you know, picking the bottom or catching the bottom in something. What they don't tell you is the opportunity cost that came with it, because they had to deal with this mess of up and down and sideways and gap lower, and from 115 back to 75, right? 40% drawdown and then a gap higher. It's a huge mess. You wait for the trend to reverse, then you get in the third, fourth inning, and you catch the meat of the uptrend. Right? So DataDog, strength above 147, most likely, maybe weakness back towards 114. DraftKings, just want to show it. These stocks keep working. You know, these growthy names, this would be an ARChy name. They keep working. That's information. In fact, we're seeing more and more ARC names start working. We just talked about what Path is one of them too. Right. So next stop for DraftKings 49.50. I want 74 out of this one, though. I'm really looking for those old all-time highs. And then I think you get plenty more. I think the mega trend that is sports gambling, online gaming is so big. I don't think the market has realized it yet. I also think, similar to Uber, the sports gambling world, at least, probably also going to be a winner takes all situation. Maybe a handful of winners, right? Because you have the state situation going on where DraftKings literally is not allowed to operate in every state yet. So you're probably going to have some sort of like oligopoly industry here. But DraftKings, you know, far and away the leader right now, growing market share, absolutely dominating, just doing really, really, really big things. So strength to 49.50. Redefine your risk there. Maris, let's talk about a couple biotech. So this is Deerfield Asset Management, MRUS. The original filings all the way back in 2022. They own 5.5% of this one, though. And just look at the multi-year consolidation pattern breakout. 33.50, well on its way to our first target of 48. This is more for illustrative purposes because there's just a lot working in biotech right now. And you're going to be hearing a lot more from us about these biotech setups soon. We have a post coming out hopefully tomorrow, but probably not because I'm going to be in Miami. So probably Monday or Tuesday. It's our freshly squeezed list, and it is just littered with some excellent charts in the biotech space with, you know, 20-something% short interest and data cover ratios that are in the double digits. So we just love to see that. Having that short squeeze catalyst in a name that looks like this is just excellent. So CymaBay is another one. CBay, you got the multi-year base breakout similar to the one that we just showed above in Maris. First target hit, a nice little coil here. This is a bull flag. I think this eventually resolves higher. Call it 24.50. Pretty much already there. So if you're not already long, this one is very viable, very actionable here. First stop, 38.60. Immunocore Holdings, I'm long. I like this one. This is one of my favorites. This is Baker Bros' name. IMCR on its way to our first target of 89 and change. Let's talk about cryptos. Who wants to talk about cryptos? I know you are all here for the crypto talk. Wow, one hole. Top 5 technical trading books and resources. Let's just take this question because it's so good. Top 5, John Murphy, Intermarket Analysis. Brian Shannon, both books. Alexander Elder's Trading for a Living. Who else do I want to throw in here? I think you got to do Edwards and McGee, right? Because that's like the textbook. You really got to do Edwards and McGee. And then I'm a big candlestick guy, so I'm going to say Nissan, Steve Nissan, the Japanese candles. I think they're, you know, that's so important. You're going to learn enough about trends in the other ones. The candlestick patterns you're going to get from Nissan. So Maybe not my absolute top five. I don't, not something I've thought about. It's a great question, but those are the five that immediately come to mind. And I go back and read these over and over and over again. In fact, on our trip to New York on the plane last week, I was reading John Murphy Intermarket Analysis there and back. And you should, right? You want to like bang these concepts through your brain. And because of the change in the inflationary regime, I think rereading Murphy Intermarket Analysis is just so important right now, right? Because we learned it one way for one sort of inflationary regime, and now all of these intermarket relationships are changing. And he wrote about all of this, right? He warned us about all of it. So I think that one's just like extra relevant right now. Coinbase against 115. What a gift. What a gift. If you weren't a believer, you didn't want the cryptos last year, well, maybe hopefully you're a believer now. You got a hard throwback in a lot of these right to the base breakout level. 115. We got to get rid of the, this markup down here at 80. We're not even talking about 80 anymore. We're not going to see 80 anymore. 115, checking back, former resistance, turning into support. And I don't like the 38% here. I think your target is going to be the pivot highs here, right? The pivot highs from Q4. And then onward, right? Just like DraftKings. I want those old highs for this one. Marathon Digital Holdings, 19, 20, maybe 21, if you want to drop a VWAP and use that as confirmation. The point is it's triggering, and it's triggering with big, big, big momentum. We'd call this a decisive breakout. And even better yet, you got the shakeout, right? So you get the breakout here in Q4. It looks like, oh, this one's going. Everybody's excited. Absolutely slammed back into the box, dances around a little bit, traps the bears, squeezes higher. Some of the best reaction rallies are sparked by these little failed moves, right? So I love it when you get the little shakeout before the breakout. Let's go above 19 all day. I own a lot of Mara calls, sold some of them today. I did jump this. I got into it, I think, last week, maybe even late the week before. Jumped the entry a little bit, but that's okay because I really wanted to be here for this momentum surge and, getting out of a lot of them at a profit, big profit today. So Mara, I will be trading my calls back to these pivot highs probably, but also being mindful of expiration. I have some very short dated contracts. So obviously I have to be mindful of the theta and whatnot. So I will be managing my way out, but ideally, we run back to these pivot highs pretty quickly before they expire, and I'm out there. Coinbase, longer term hold for me. MicroStrategy is another one. We, was talking to a client about it this week. MicroStrategy is very much in that conversation with Coinbase and Mara. It's very clean against this 500 level. What a reaction off this level. You see the demand pouring in for this name at this polarity zone. So I like MicroStrategy too. Some comments in the chat about how the MicroStrategy calls have just done so well. You also have to understand it's a really high price stock too, right? So the capital outlay, right, the cash that's going to be tied up getting into a position like this is going to be quite different from if you're buying calls in something like Mara, which is a $20 stock, right? So it's just something, it shouldn't necessarily change the return profile, but I hate tying up capital, particularly in bull markets, because, I'm not sitting around with a ton of dry powder. I'm not carrying a large cash position right now, I can tell you that much. So I do have to kind of consider, this is a high price stock, it's a pain in the ass. It's going to tie up this capital. Maybe that's why I'm not in MicroStrategy. Advanced Drainage Systems, WMS. Beautiful breakout. Breakaway gap, gap and go. We love to see them decisive like this, right? Breaking out above these 2022 highs with a monster gap. On earnings, 152 is that level. For above 152, target 200. Groupon, this is a new one. So Groupon GRPN. I didn't even know this company was still around. I remember people used to use this like 10, 15 years ago. I don't know how I feel about this one. 16 though. 16. Clean against 16. Target of 31. Just about a double. Not bad. GitLab, GTLB. I think this is the one that Google has that big ownership. Yeah, there it is. Alphabet, Form 4 filer, 20 million. They have a big stake. I thought they were reducing it recently. Doesn't really matter because look at this base. This is a chart we're buying anyway. GTLB above 68, first stop 94, from there 136. Crinetics Pharmaceuticals. Alfonso, do you just keep adding charts? We got to wrap this thing up. That's the kind of market we're in. We could do a 2-hour hot corner call. There's so many good looking charts right now. Crinetics Pharmaceuticals, CRNX. This is another one. My old homies, Point72 Asset Management LP. I helped incorporate that company. So the filing was from September of last year, 5.6%. All right, the good old boys like this one, 37.50. Above there, the breakout is in. Next stop, 54. Let's go Mets. Why am I showing you this chart? Go catch this falling knife. I dare you. I'm kidding. Please don't do that. New York Community Bank, NYCB. Look at these nasty candles. This is a monthly chart. Really, really weighing on the regional banks. Gotten stopped out a lot of bank trades this year. The banks ruined my January. That's okay. Coming back strong here in February. But it's really, this has been the overhang, right? Are we going to have another bank run? Is this regional banking crisis 2.0? Remember last March and May? NYCB is that issue right now. Why am I talking about it? Once this overhang is removed from the banking sector, I think these stocks, there's going to be so much opportunity in this group. I continue to like them. We got to be patient. They're clearly not ready yet, but we have evidence that maybe we're getting there. We had 6 Form 4 filings hit the wire today for New York Community Bank. They'll all be on the list, I guess, Monday morning. They'll be on the daily email. 6 insiders ran out here buying NYCB shares. Yes, I understand they do this as a vote of confidence. A lot of this really is just about confidence. If you remember back to the Silicon Valley Bank thing, they thought they were going to be fine. They were going to do a little capital raise. They dropped a press release about how they needed to do a capital raise. Thought they'd be fine. That press release spooked everybody, scared the hell out of everybody. So then they ran to their ATM or their bank, tried to withdraw the money, bank run ensued. Goodbye, Silicon Valley. So a lot of this is about confidence. You can't start losing deposits when you're having the balance sheet problems that you already have, right? So huge vote of confidence. And again, understand what I'm saying, right? Maybe they're just trying to game this whole thing, right? But a huge vote of confidence with these 6 insiders coming out and buying shares. Maybe they finally help put a floor in this NYCB disaster. And then that kind of takes the cap off of banks and regional banks more broadly and financials, and the space can start, trending higher again, right? So that's why I want to talk about that. If and when it happens, JPMorgan above 173, got to be a preferred vehicle, right? Got cute, bought some of these regionals the past few weeks, even back in December. They're good for a little while, rolled over. But the big boys continue to look far better. JPMorgan, as has been the case for most of my career, is in a league of its own when it comes to banks, even banks all around the world, not just in the US. And then just some perspective. Why am I out here talking about financials? Zoom way out on a chart of large cap financials. This is XLF, right? If you think price memory is not real, rejected here at this 31 level right before the financial crisis, and then we absolutely cratered back down to like $5 a share. Peaked at the very same place, got all the way back to those pre-financial crisis highs. Took us about 10 years. This is 2018, rejected again. Then right before COVID, 31, rejected again, off the COVID lows. Finally got the breakout. 2022 bear market brings us right back in to this former resistance zone, which is now acting as support over and over and over again over the past year and a half. And now we're breaking out of this little reversal, right? And heading higher within the context of a 16-year base. This is a big chart. financials are going to be a pond we're going to be fishing in more and more and more as this bull market rages on. That's all I got, guys. As always, thanks so much for joining me. Questions, comments, concerns, want to say hi, shoot us a note, info@allstarcharts.com. I'm just going to rip through the chat really quick, see if there's anything we should talk about. Uber, any dip is a buy? Hell yeah. But ideally a dip back to those prior cycle highs, which we've got a little bit away from now. Palantir, I don't want to buy it right here. We'll bring the Palantir chart around for next week. It's a name that we've been involved in. It was really strong off of its 2022 lows, and then it was kind of sideways and messy for almost 3 quarters. And now you're getting just, an authoritative upside resolution. Big fan of Palantir. I thought the call was great. The earnings report was excellent. Yeah, and real low energy, right, Nick? I know. I need a nap, guys. Yeah. Rachel's portfolio is going up a lot. Hey, look at us. Good week for all this week. Line go up. That's all we could want at the end of the day. Okay. Can he cite a book we can read about this cycle? I don't know if they wrote a book about this cycle yet. It's not over. I'm not sure what you mean by that one hole. I am so excited about my Yukon Huskies, Drew. So excited. They look so good. I was lucky enough. I went to the Final Four in Houston 2011. It was the Kemba Walker year. So good. Just time of my life. Got to watch them win the national championship. And I think we're heading back there this year. So very excited about my Yukon Huskies. And yeah, the Uber call was great. Rachel, you're right. I'm a back of the napkin fundamentalist. Really high level. I don't want to get too much into the weeds. And guess what? A lot of times, that's the better way to do it. A lot of us, we do too much out here sometimes, I think. It's easy to fall into that trap. ARM, what a move. That's the kind of market we're in. How much was ARM up the other day? This was the semiconductor IPO last year that no one was excited about. No one. Up 48% in a single day yesterday, following through today. That is the market we're in. Semiconductors red hot. You love to see it. Shopify looks great. Unfortunately, it's not a hot corner name, because we were literally just talking about it before we got on here as we were making the deck. I'm like, let's get Shopify in there. Fonz is like, it's not a hot corner name. I might just start bringing them along anyway. But yeah, Shopify looks excellent. Another one, really expensive, but in my opinion, kind of justified. Shopify is in a league of its own, offers their customers, a value proposition that really no other online platform can offer. So what should the multiple be on a company that has no competitors? I don't know, right? Nobody knows. Don't talk to me about Disney. Freshly squeezed. Yes, that's our short squeeze. No, we don't do it on a regular schedule. We do it when I see heavily shorted names working really well, then we'll do like a special report. So that's going to be coming out in the next few days. And like I said, biotechs galore. So if you're into the biotechs, I'm excited. I'm excited about these bios. Murphy's TA for financial markets is another one that would be on a lot of CMT's top 5 list also. So 100% that would have been, in the honorable mention. So yes, anything John Murphy, amazing. Martin Pring, another one, shout out. I love Martin Pring's work. Really good. But Edwards and McGee also. Wow, the chat is active today, guys. Please feel free to drop off because I'm just trying to get through some of these questions as quickly as I can. I don't want to miss anything important. How do you feel about Palantir? I like it a lot. I I know I'm late here. Could you check out ELF? So that's for Chart Request Live. Diverse Insight. We have 2 shows a week, every Tuesday and every Thursday, 1 o'clock Eastern time, where we will specifically take chart requests, ticker requests from the chat and chart any chart that you want. So join us on Tuesday, and we'll definitely check out ELF. But it's been a strong one. These cosmetics companies, they're just really good. Second banking crisis, too obvious. Probably. Or do more banks just kind of disappear and that's fine, and the market just keeps humming along, right? Hasn't been the case since this stuff with NYCB came out. It's really put pressure on the whole space. But would I be shocked if like New York Community Bank is maybe going to zero or declaring bankruptcy and all of a sudden, regional banks start trending well? That wouldn't shock me either, because like we've seen this story before, right? There's nothing systemic about what happened last year. The rest of the space was fine. We just kind of, kept moving along. Melly, please. Big fan of Mercado Libre. I don't think it's in our universe though. Shout out Mary. I'm excited for this cherry pie. I'm sending key lime pies to a couple of coworkers here this week, and word got out. Now everybody wants a key lime pie. They're really good. They're really good. Kansas beat you. Yes, thank you, Sam. That's our amazing intern, Sam, reminding me that his Kansas Jayhawks did, yes, beat my UConn Huskies. I hope we play again. Listen to that call. Rachel, if only there was more time in the day, but I do have a long car ride tomorrow. So any earnings calls that you guys would recommend, let me know. Podcast 2. I'm looking for some audio content for the car tomorrow. But don't worry, I have a long list already. I never get through it. Okay. ARC F. Yeah. Yeah. A lot of those components, Larry, for sure. When were the insider buys? Mark, I saw at least 4 of them hit the wire in the first hour of trading today, between like 9:45 and 10:45. I don't know exactly when the others trickled in. Okay. So that is it. Everybody have a great weekend. I'll be in Miami, so hit me up if you're around. Can't wait. I'm going to be at the Exchange ETF conference for a day, 2 days, maybe go to a Super Bowl watch party at Live Nightclub. So very excited for my Miami trips. As always, going to eat some really good food. But as always, thank you guys. Thanks everybody for coming, hanging out. I know we went a little bit long today, but there's just so much to talk about. Also, I just want to say, go give the morning show a watch. I think for the last week and a half now, the like kind of bull bear debates that JC and I have been having on the morning show, I think are so good. I think it's a great just kind of exercise. It's a great exercise for me to do, right? To make sure that I'm thinking the right way and weighing all my data the right way. And I also think it's a great learning experience for other people to just watch kind of like how we think through our outlooks, right? And how we kind of craft our theses and how we weigh the evidence. And I think just the back and forth has been so good. We've covered so much stuff that I would have loved to go over in the intro today, but we only have so much time. So go check out the morning show. I think the shows have been absolutely excellent. The best ever just this past week and a half. So as always, thanks everybody. We will see you next week.